Well, welcome to the first episode of Deloitte's State Tax Perspective, a new video series presented by Deloitte's Multi-State Tax Services practice. In this first episode, we'll be discussing recent trends in restructuring, including how disruption is impacting business imperatives and structures on a multi-state basis. My name is Jeff Burns, and I'm a partner in Deloitte's National Multi-State Tax Services practice. And with us today is John Easterday. John, welcome to what I hope is going to be the first of many of these conversational pieces around multi-state taxation and collaboration with our clients and internal tax services practices. To start us off, can you please introduce yourself?
Thank you, Jeff, and I'm glad to be here. I'm John Easterday, a partner based in Chicago. I'm part of Deloitte's National Multi-State Tax Services practice, and I lead our debt structuring team.
Great. So, John, as a partner in the National Multi-State Tax Services practice, can you talk a little bit about what you're seeing our clients experience and why the need to combine business and operational changes with the tax footprint is relevant?
Sure. First area we're seeing quite a bit of activity relates to debt. By way of background, many organizations utilize debt financing as a means for acquisitions, capital expenditures, and funding operations, among others. However, when you think of the complex legal entity structures of many organizations, often the lower tier subsidiary operating companies are utilizing the cash or debt, while the debt and interest expense is recorded at the top tier holding company. This creates two issues. One is that the recording of the debt and interest expense is not aligned with the legal entity using the funds and providing the cash flow necessary for repaying principal and interest, thus foregoing potential deductions at the operating company level. And second, with 163J now being calculated under an earnings before income tax or EBIT approach, as opposed to EBITDA as it has been historically, many organizations are even more focused on prospective IRC Section 163J limitations at the reporting entity level. We've been working with our clients to analyze their financing arrangements and assist with debt realignment within the organization to solve for these issues. One thing of note is that we have also been seeing several circumstances where debt realignment impacts a company's overall franchise tax liability as well. The next area we are seeing renewed focus on structuring is around business disruption. Whether an organization is experiencing supply chain disruption, technology transformation, changes to the business due to ESG or tax reform, more multinational organizations are revisiting their legal entity organizational structures as a function of holistic changes in the way they do business. Businesses are evolving at rapid pace due to disruption, and there is a need to align the organizational structure and intercompany transactions with business and operational changes. Finally, given the intersection of state and local and international taxation through areas such as previously taxed earnings and profits, basis, and general global structuring that has a significant state impact, our clients need assistance analyzing the state impacts of any changes to their global structure. The Tax Cuts and Jobs Act created many unique conformity issues for state and local tax purposes, and clients need assistance in analyzing and resolving those issues.
John, those are great examples. Can you talk a little bit about how Deloitte can add value in the situations you just described?
Jeff, there are a number of ways in which we can provide assistance to our clients. I see it in the following areas: general state and local tax technical support regarding transactions, structuring assistance and the development of planning in conjunction with significant business changes, leveraging technology to support both the analysis of structural and business or operational changes and future state and local tax liabilities, and finally, controversy. It is always helpful to prepare for any state and local controversy that is related to holistic structural changes and changes in the business, whether due to acquisition, divestiture, other disruption, or debt financing. I feel that we can truly be a partner with our clients in their transformative journeys in the context of state and local tax. Bringing our experience and industry knowledge will help support the success of the tax department within the organization and ready them for future controversy.
John, thank you for discussing this with me today and for the informative discussion. And also, thanks for being the first guest on State Tax Perspectives. I certainly look forward to our next episode. John, great speaking with you.
Thank you, Jeff. Have a great day.